Hey everyone, we have a big video for you today. I'm going to be going over 5 stocks I'm buying this month for August 2021. Now before getting into it, if you could smash the like button, it really helps the YouTube algorithm and I definitely appreciate that. Subscribe if you haven't already. Now let's get going. So today's the first trading day of August, and I figured what better way to start the month off than to let you know the top 5 stocks that I like right now. Now the first 2 companies out of the 5 are gaming companies. Stock 1 and Stock 2 that we're going to be talking about both are involved in the gaming space. Now the first one should be obvious to anyone who's been watching my channel. It's Corsair Gaming. Now Corsair under $30 a share is a must buy for me, and it is still under $30 a share, so I plan to continue to add to this position. Now this video is being recorded late Sunday night, so I don't know what Corsair is going to open at, but as of the close on Friday, Corsair was trading for $29.19, below $30. Below $30, it is a buy for me. It is still a buy, even in the $30 to $34, $35 range, I would still be buying it. But under 30, it's a must buy. That is why it is on this list. That is why I continue to add. Now let's go over some of the metrics. This company is worth $2.69 billion. It has a trailing PE of 18 and a disgustingly low forward PE of just 15. If we just look at the end of 2020, the forward PE was over 25. So things have changed. This price has come down a lot, and the earnings have went up since, and that has left us with a undervalued stock. Now, since earnings have gone up, the trailing PE showing 18, it used to be at the end of 2020, it was a PE of 50. And in September of 2020, it was 58. So, I mean, it has come down significantly. Earnings are going up, and the valuation has been coming down. It was worth $3.3 billion. It's now $2.69. The price to sales is also just 1.4. Extremely, extremely low for a company growing as fast as they are. The next thing we got to talk about with Corsair is their earnings are coming August 3rd. This is right around the corner. This is tomorrow. So I think there is something that's going to happen that I haven't mentioned before, and I don't think many people realize it. And this has been something I've been looking into, and I started realizing it could have a pretty significant impact on the stock. Corsair is a new public company. They only entered the public markets in September of 2020. Now, why is that important? The reason it's so important is because by being public for less than a year and also having a small market cap, it's less than $5 billion, that has made it that many analysts have not yet rated the company. If you go to tip ranks, they have 3 ratings only, and those 3 ratings are strong buys. They basically say that it's worth $50. That's 71% upside from where it is, but that price target's not even the point. It's not even about could this price target go higher, will it go lower? It's about the analysts that initiate coverage, which I'll get into in a second. Now, just to show, Logitech, for example, been in the market for longer than Corsair. It has 7 ratings on TipRanks, so not much more, but more than double. And Activision Blizzard has 16 ratings on TipRanks. It's a much larger company, and they're a producer of video games. Now, my belief is that analysts will initiate coverage on Corsair once it builds more history as a public company. So the more earnings reports, the more data that analysts can use to basically predict a price target. So I think that analysts don't want to risk their reputation on a stock that they still are unsure about. And my hope is that Corsair crushing numbers this earnings could prove to analysts that it's not just a stay-at-home play, and it could give them the confidence to initiate coverage. Now you might be wondering what happens if they initiate coverage. Well, the firms that they work for will begin to probably buy it for the clients if the stock, assuming, gets a similar strong buy recommendation like the current analysts have on it. So that, coupled with a small market cap, short interest that will have to end up being covered, could be a big boost for the stock in the short term. Now, as undervalued as I think the stock is, all stocks trade based on supply and demand, and until analysts initiate coverage, these firms and institutions aren't going to be buying, so that demand hasn't kicked in yet. But once they initiate coverage, if they believe it's a strong buy, institutional buying pressure for a stock with a market cap of less than $3 billion could be a huge, huge boost to the stock. And for anyone who comments, oh, it already has a huge percentage of institutional ownership, it's mostly just a single institution, EagleTree. I'm sure there are others that own it, but EagleTree is the main reason that that percentage is so high. So we'll see that change. For more information on Corsair Gaming, check out my Corsair videos. I'm going to link them in the description. I am holding over $1 million in Corsair across my accounts. I am seriously looking into some new option plays, so stay tuned for that. And if the earnings are good and the stock moves down, I plan to add more to my position. Now, the reason we're not going to go deep into the numbers more here is because we have a lot of stocks to get into. It's a 5-stock video, but that is why I will leave in the description links to deep analysis videos for each of the 5 stocks. Now let's go to stock number 2, Turtle Beach. Turtle Beach, ticker HEAR, is trading for about $30.90 at the close on Friday. This is my second pick for August. So stock number 2, Turtle Beach, is definitely a buy in my opinion. I own a lot of it and I've been adding to it. It is a small market cap company. This company's market cap is only $488 million. Now, most companies I'll be speaking about and I invest in are worth tens of billions of dollars or more. But Turtle Beach had such great fundamentals that I couldn't basically ignore it. And I decided I'm going to buy this small cap company because I believe the future is very, very bright. So looking at its trailing PE, it is a trailing PE of under 10. So looking at the last 12 months, the price to earnings was 9.98. Now, why does it have a forward PE of more than that, of 19.65? That's something I'm going to get into in a second, but I do just want to point out that the price to sales on this company is 1.28, extremely, extremely cheap. So now let's get into that forward PE. The forward PE of 20 almost, that's still not a bad PE, 20, but that's coming from analyst projections of being down 11.9%, so basically going down 12% their revenue for this quarter that we're in, year over year. So they're expecting the growth not to be growing, but actually to decline the sales. And then they expect the quarter after that to have basically negative 8% year over year revenue. So they're expecting revenue to be dropping. They do expect that we're going to see next year increased revenue. They're expecting 8.8% increase in revenue in 2022, but I think this is fundamentally wrong. I believe that they're actually going to continue to grow their revenue, not decline, and that difference could be a huge, huge signal to analysts. So earnings for them are August 5th. They're this Thursday. So we're going to get an answer basically on Thursday of how revenue is changing. So what do you think happens to the stock if instead of revenue dropping 11%, it ends up increasing year over year? And like Corsair, there are only 3 ratings on tip ranks for this company. Now, the good thing is, analysts rate this company at $42.33 for a 12-month price target. That's up almost 37% from where it is. And keep in mind, these analysts that have these price targets are expecting the revenue to decline. So where does the price target go for the next 12 months if revenue increases? This creates a nice buffer because if revenue goes down a little bit, even down the 11%, well, that's what's expected, and the price target still has 37% upside. But if revenue goes up, I assume more analysts will initiate coverage like Corsair, and on top of more analysts initiating coverages, current analysts that have coverage will increase their price targets. Now let's go over my position. So I'm building up a big position in ticker here, Turtle Beach, 15,000 shares. My cost basis is $29.85. I put the screenshot so you can see the shares. It's basically almost $500,000. It's $463,500. Now, when I first started building my position, it was before July 19th. And July 19th is an important date because that's when Donerail Group released a letter about them wanting to acquire Turtle Beach and it getting denied. Now, that has got me even more bullish, and I've been even buying more shares of Turtle Beach since then because Donerail Group believes it's undervalued, like my assessment, and so does the management because the management turned down a premium to the stock price it was trading at because they felt that the stock was being undervalued even with that premium. Now, I've made videos about the Donerail letter, going over it. I've also made videos about Turtle Beach stock analysis, before the Donerail letter came out, so I'm going to link those videos in the description if you want to get into more of the numbers and price targets for Turtle Beach. But yes, it is a buy. It is number 2 on the list. I still plan to buy on any weakness this month, and I will be making a video Thursday, August 5th to go over their earnings and make sure that my thesis is still intact. Now for stock number 3 and stock number 4 on this list of what I'm buying this month, they are Chinese companies. So for those that have watched my videos before, I'm sure you can guess which companies they are, but those that have not, we're going to put the links in the description to the analysis videos, and stock number 3 and stock number 4 are Alibaba and Baidu. Now I know Chinese companies are very controversial right now in the investment world, and these Chinese stocks have taken a massive beating. Now personally, I believe China is going to play a major role in the world economy, like they currently do, and the 2 Chinese companies that I trust the most to get accurate information are Baba and Baidu. So these 2 stocks have more risk than anything else in my portfolio. I want to start with that and let you know. I understand the risks, but I also think when everyone is being fearful, I need to take advantage. Fundamentally, both Alibaba and Baidu trade extremely cheap compared to their US peers and for the growth they have in general. Let's start with Baidu. If we look at Baidu from 3 months ago to today, their market cap today is 57 billion. It was 75 billion in March of 2021. Their trailing PE is 7.57. I mean, this is a ridiculously low PE. We are talking about one of the leading companies in China growing with advancements in AI. This is not a company that deserves anywhere near under 10 PE. It is not just a value play. This is a growth disruptive company. Now, besides all the worries with regulation and everything, the market believes that revenue is actually going to drop. I happen to disagree, and I think that revenue is going to increase, but we will see, and I'm going to keep an eye on that. Now, I think the stock is worth somewhere around $300 a share today based on my analysis. I've bought 500 shares already when it was $206 a share. Now, obviously, it's continued to drop, and it's now $164 a share. But my thesis remains intact, so I am just buying more shares. I'll be buying shares this week. Now, when I started buying at 206, I was well aware there's a possibility it would continue to drop before getting to the price that I believe it's worth. But it's not about timing the market. It's about finding a true value based on fundamentals where you believe the stock will be in the future, and then if it makes sense to buy it today, you buy it. If it goes down, it's okay. You have to stay strong to your thesis, and as long as everything remains intact, it's more buying opportunities. So that's what I'm doing with this. I am buying more, and I will continue to reevaluate on earnings reports once I have more information to basically judge if I made the wrong decision or the right one. Now, if you haven't seen my Baidu stock analysis, I get extremely deep into the numbers. I'm going to put that in the description. Definitely watch it if you have any interest in investing in Baidu. Now let's move to Alibaba. In my last video that I uploaded, it was about Alibaba stock. It was an analysis and my price target. Alibaba is the crown jewel of companies in China. This is the top stock that I would pick in China, even more so than Baidu. But when I started buying Baidu, Baba wasn't down enough and trading at a low enough multiple where I decided it was a better buy than Baidu. Today, on the other hand, it has now hit the point where I believe under 200 a share that it is worth buying and a great investment for the long run, assuming all issues with regulations and whatnot do end up passing. Now, to get some perspective on where the stock has traded in the last year, it's had a range of $179 to $319. It is currently trading basically at the 52-week low. So for a long time, I didn't feel the need to own Alibaba because US tech was trading for a great valuation. Now, though, I believe that US tech has come to, at least big tech, has come to a much higher valuation. They're all pretty much at highs. They're trading at multiples in excess of 30, and most of them, not all of them, I feel are slightly overvalued. Where on the opposite end, because of tension between the US and China, and then the Chinese government crackdown on big tech companies like Alibaba and trying to make examples of them, that has made these Chinese companies with equally impressive growth as the top big tech companies in the US have much lower valuations. Now, this created a peak fear moment, in my opinion. I don't think that the fear is going to be gone overnight, just to be clear. But I do think we're close to the bottom in these stocks. And the reason is the fundamentals are just too good to pass. So when Alibaba went under 200 share, I bought 500 shares. That 500 shares is just under $100,000. I put the screenshot here so you see it, and it's in my video about Alibaba that you should check out as well. So this month, I plan to continue to add more Alibaba and Baidu if it continues to go down or if it stays around where it is. Now, I plan to increase my position on Alibaba and Baidu by as much as 2.5 times my current position for both companies. Now, we're going to follow up on both companies after their earnings, and just so you guys are aware, Alibaba has earnings on August 3rd, so same day as Corsair, and Baidu has earnings on August 12th. Both Baba and Baidu videos are going to be linked in the description if you want to get deep into the analysis. Now, the fifth stock that I am buying in August is a fintech player. Many of you are not going to be happy with this one. Some of you will. But regardless, I make investment decisions based on if I can make a good return. And that is Robinhood. Now, Robinhood just recently IPO'd, and I know there's some serious hate for this company. The stock is trading at the end of close on Friday at $35.15. Now, I have some reasons that I'm buying it, and we're going to get into those reasons. But first, I just want you to be aware, Robinhood is a very different company compared to the last 4 stocks that I recommended. And the reason I'm saying it's different is because unlike the last 4 stocks, the last 4 were recommended because the purchase revolved around fundamentals. It was that the stock's numbers, its current fundamentals, make the stock look like a cheap stock. So when it's trading underpriced, you should basically buy a company that's being undervalued. Well, I am looking at Robinhood very different. It is similar to valuing a company like Square, Shopify, SoFi, etc. Many of these fintech companies either A, don't make money yet, or B, trade at a very high multiple of the earnings they currently have. And for this reason, most value investors would stay away from these types of companies. Now, I respect value investing. That said, I believe in disruptive growth companies. And when looking at spaces being disrupted and picking the right companies, you can make a far greater return than just a value investment. Now, a perfect example would be Tesla. I bought Tesla in 2018, and any value investor would look at the current numbers Tesla had in 2018 and would tell you to stay away. Now, I've made over 1,400% on that investment, and I continue to believe there are more gains ahead. So disruptive companies can take longer to play out, but the overall profits to be made, if you're correct in their disruption, could be much greater returns. And I believe the banking sector is ripe for disruption. Now, I'm not new to investing in fintech companies. To give you some history, I participated in the IPO for Square. I was issued shares at $9 a share. They're around $250 a share today. I also invested in SoFi, Social Finance, when it was a private company just in December of 2020. I invested at a $4.5 billion valuation privately. I have those shares publicly now, and now the market cap is over $12 billion. Both of these investments from a value standpoint would have not made any sense, but from a high level of what they were building out, it was clear that they were going to be worth more in the future than they were at the time of investment. So I don't know about you, but everyone I know that has got into investing in the past 2 years, 3 years, they all use Robinhood accounts. They all complain about things with Robinhood, but when I ask them why they don't change brokerages, they say they are going to, but they never do. So like it or not, Robinhood has one of the best user interfaces. It's very intuitive and it's easy to use. And when all the GameStop mania happened, people said Robinhood was dead. The growth in new accounts has been insane since then. Now on the day of IPO, I did a live stream on Robinhood. And one of the people watching the live stream commented, Wall Street Bets users say they hate Robinhood, but every screenshot on that subreddit is from Robinhood. And that basically sums it up perfectly. You know, as much complaining as there is, they use the product. Now, if you want to get into the details and go watch the entire live stream, I'm going to put it in the description like everything else, so you can take a look at that. But here are some key points. 1, they are locking in young customers that are going to span a lifetime with them. 2, they continue to expand the product and service. For example, they went from just buying and selling stocks to giving you margin, to allowing options, to allowing cryptocurrencies, to offering a cash card, and I'm sure they're going to continue to expand that further. 3, the TAM, total addressable market, is massive. Many banks that are worth over $100 billion apiece. And 4, they are disrupting. Legacy banks are not. They're not innovating while Robinhood is. So like everything else in this video, this is a stock I am buying in August. I have built up a fairly large position very quickly because I think under 30 billion is a steal to a long-term investor based on the disruption they are going to have and the long life cycle of their customers since they start off so young. Now I have built up 10,500 shares. This is close to $370,000 of stock. I posted the screenshot here just so you can see the position, and I plan to increase this significantly, especially if it continues to drop. Thank you for watching. Please like the video if you haven't and subscribe if you haven't. What do you think of me doing a monthly video of my top stock picks for that month? Do you think I should continue doing this? Should I do it next month as well? Let me know in the comments what you think. I appreciate you all. Until next time.